Listen, brother. If you haven't checked your crypto portfolio today, now might be the right time, because what's happening in the market today could seriously shock you. Bitcoin, which looked relatively safe just yesterday, has now dropped to $89,000. Yes, you heard that right, more than a 3% drop in just one day. But that's only the trailer, my friend. The real story is Ethereum. Ethereum has completely stunned everyone today. A brutal 7% crash. It's now down to $2,170. What a scene. Both assets are trading at their lowest levels in the past 2 weeks. But the big question is, what actually happened? Look, the story starts in Washington. President Donald Trump has threatened tariffs on Europe, and after that, global markets experienced an earthquake. Talk of a potential US-Europe trade war has spooked investors across the world. Global equity markets were already weak, but these tariff threats were the cherry on top. Yields on US and Japanese bonds are also rising, which means a full-blown risk-off sentiment has spread across the markets. Now listen to these numbers. In just 24 hours, overnight, brother, more than $1 billion worth of crypto positions were liquidated. $1 billion. Do you understand how massive that number is? This is leveraged positions unwinding, ETF outflows accelerating, and investors slipping into panic mode. And here's the most interesting part. When crypto is falling, where are people going? Gold and silver. Both traditional safe haven assets have hit record highs today. Looks like the old friend came through in tough times. WazirX founder Nishal Shetty says this isn't panic selling, it's actually consolidation. Lower leverage, reduced risk-taking, all signs that traders are becoming cautious. Geopolitical uncertainty and trade-related issues have clearly impacted overall risk sentiment. But listen, brother, this is only one side of the story. From a technical analysis perspective, $88,000 is a critical support level for Bitcoin. If this support breaks, the road ahead could get much tougher. Resistance stands at $92,800. For Ethereum, support is at $2,080, while resistance lies between $3,150 and $3,250. On-chain data is showing something interesting. Spot volumes have increased from $8.8 billion to $9.3 billion. The net buy-sell imbalance has expanded to $81.2 million. This means sell-side pressure is starting to ease. That's a positive signal for the long term. Now let's talk about altcoins. And man, things look even worse there. Monero took a massive hit, a 19% crash in a single day. You rarely see such a sharp drop in market capitalization. Hyperliquid, Immutable, Morpho, Cosmos, Quant, Chiliz, Dash, Render, Polkadot, Tron, Solana, Aave, all of these are down between 4% and 9%. The entire altcoin market is glowing red. But every dark cloud has a silver lining, right? Some tokens have actually posted gains. Layer 0, Canton, Story, Pax Gold, Tether Gold, Tezos, Bitcoin Cash. These are up as much as 12%. What's especially interesting is that gold-backed tokens like Pax Gold and Tether Gold are rising, a clear signal that investors are looking for the safety of gold. So what do analysts think about this situation? Delta Exchange research analyst Ria Segal says Bitcoin is trading below its short-term moving averages. Traders should brace themselves for continued volatility. Macroeconomic uncertainty, bond market stress, and US-EU trade headlines are all influencing sentiment. Mudrex lead quant analyst Akshat Siddhant points out that spot volumes have increased from $8.8 billion to $9.3 billion. This suggests that sell-side pressure is aggressively declining. According to him, $88,000 is a critical support level for Bitcoin, and if it holds, a recovery is possible. But don't forget, my friend, Bitcoin is still 29% below its all-time high. Back in October 2025, Bitcoin was trading at $126,198. Today, it's at $89,000. That means there's still a long road to recovery. So what's the takeaway from all this? Volatility is the second name of the crypto market. Macro factors, geopolitical tensions, and trade wars directly impact crypto prices. When traditional markets face uncertainty, crypto is usually the first to react. But remember, this is a temporary phase. The long-term outlook remains strong. Interest in crypto as an alternative financial system is still intact. As soon as global clarity improves, market confidence will adjust back. So if you're a crypto investor, this is the time to review your strategy. Don't panic sell. Understand the support levels. Focus on risk management. And most importantly, don't forget diversification. The market is red today. It could be green tomorrow. In the world of crypto, these ups and downs are part of the game. Those who stay patient are the ones who become long-term winners. So friends, that was today's latest crypto market update. Markets can be brutal, but that's also where opportunities are born. Stay smart, stay informed, and make your decisions wisely.